What's up everyone, my name's Robbie. This is Robbie in Manila, and today I'm revealing my ETF checklist. So I think ETF checklists can be a great idea for a lot of people. A lot of investors probably will benefit from just having a set amount of rules that you always want to see inside of an ETF. Now you may be a regular watcher of my channel, and if you are, then maybe you've seen that I have shown this ETF checklist in a few videos before. However, it's updated, and now you might be asking yourself, why do you need an ETF checklist? Well, you don't need one, but I just find it helpful to make sure that the ETFs I'm looking at that I'm interested in basically check off some boxes. So anyway, let's go ahead and take a look at this checklist after the intro. All right, so let's go ahead and jump into the computer, take a look at the checklist. But first, real quick, at the end of this video or during the video, I'd love to hear from you in the comments what you think of the checklist. So just let me know. I'd love to hear from you. Okay, so here is the checklist. Now let's go through each of the columns and I'll kind of go over like why I have them. I'll tell you where I get some of the data. Hopefully this thing really helps you out. So the first thing we have is the gross expense ratio. Now, for this one, everyone is different. Everyone invests a bit differently, and some people hate having managed ETFs because they oftentimes have higher fees than non-managed ETFs, ETFs that just track an index. So, for example, ARKK, the one we're going to use as the example here, has a 0.75% gross expense ratio and net expense ratio. So that's very high for some people. For me, I'm okay with it. So it fills a part of a portfolio, in my opinion, that I want, and I'm okay to pay a bit more because I can't really get what ARK gives somewhere else, and I want a bit of exposure to ARK in my portfolio. So I'm okay to pay a bit higher of an expense. Now, some people aren't, and so if you don't agree with this, then that's okay. It's up to you and how you invest. So for me, this is what I think is a low, medium, and kind of a high expense ratio. A low expense ratio, I think, is like 0.1%, and this is usually based on if you're using some type of ETF that is just tracking an index or something. So 0.1 is pretty low, 0.1 or below. 0.2 is like a medium, and then over 0.3 is getting high. So this is red and it's high. So this is the gross expense ratio. There are times where funds have a net expense ratio that's lower than the gross expense ratio. Essentially, they maybe give you a little kickback at the end of the year or something like that. Usually it's the same. So that's just there just in case you see something weird like that. Then there's like the net assets. So how much do I want to have in this fund, or what's like the minimum I want to have in any fund? So really, anything less than 20 million, I do not really like investing in that. If it's got 50 million, that's, to me, it's like medium, and so I'm okay. 100 million, I'm definitely fine, and of course more than 100 million, totally fine. The average volume, so you can do this over like 5 days, 10 days, whatever, wherever like you get the data. I got this from Schwab, I believe. So average volume, 10 days. You can go on ETF.com. I think you can find this data. You can go on Schwab, Vanguard, Fidelity. I think they all have this for you. For me, ARK, when I wrote this down, was 3.6 million. So for me, like low is 50,000. So if a company has 50,000, like that to me is like pretty low, and maybe there's a day where no one buys any shares of an ETF. I don't want to invest in something like that. I want it to be liquid. I want to be able to sell my shares if I need to. 500,000 to me is medium. So anywhere like around the 500,000 area, totally fine with. Of course, a million is even more liquid. That's good too. So sometimes the assets that are inside of an ETF, the underlying ETF, maybe it is selling for less than the total of all the assets, or it could be selling for more than the total assets. Of course, you want to look at this to see and make sure like it's not always selling like at a premium, or maybe it's just like a weird day that you're trying to buy it and it's at like a big premium. You can lose out on some money this way. So I like to just take a look at that just to know 0.03 totally good for ARK. A low one, which would be good, is negative 0.1. 0 is just normal, of course, and then 0.10 means that it's trading for more than the assets inside the ETF. So I don't like that. Next, you have the bid-ask. So just like a stock, ETFs have bid-ask spreads. You go to the exchange and you buy these different ETFs, right? So a bid-ask for me, and we have it here in a percentage term. So 0.13% is what ARK is, and then 0.01% to me is low, of course. 0.1 is okay, and then 0.2 is kind of high, so I wouldn't want to go up to that area of a bid ask. I just want to make sure that I take a look at it. This you can easily find. I found it in Schwab. They have some data that goes actually historical a bit. I think Fidelity also actually has good data for this one, so you might want to check Fidelity as well. Tracking error. If it tracks an index, I want to see if there's a tracking error or not. Again, Fidelity has some good info here, and I'm going to put a link in the description below, just a page of, let's say, ARK, so you can see some of this data that you might want to look for. Next, you have the percentile ranking. So the percentile ranking, I find this on Morningstar or on Schwab. So you just go to, in Schwab, I believe it's in performance. In Morningstar, it's in performance. And then you can just say, okay, what's the percentile rank? The first percentile is the best percentile. That's how it is in Morningstar. In Schwab, I believe it's the reverse. 99 percentile is the best overall percentile that there is. So want to make sure that you understand how the place that you're looking at is actually defining it. So for me, having a percentile rank that's in the 50th percentile is low. I would love to see it at a higher 30 percentile, or 20th is also good. It also depends on what you're looking at. So for example, if I'm looking at an asset class that is out of favor, or a style of investing that's out of favor, for example, value investing has been out of favor for a while. It has not done well, but I might be okay with the fact that the percentile ranking might be kind of low if it's going up against other funds that are not also value. So you kind of need to look and see what you're dealing with when you're looking at these things. But again, just kind of generally, those are the numbers I like to see. In terms of the underlying index, I like to see what index it is kind of going up against. For ARK, it actually doesn't really matter, because ARK doesn't really... I wouldn't compare ARK to an index. There are indexes that may be kind of similar to an innovation type ETF that ARK is, but I just didn't put it on here. The beta is basically a measure of volatility, and that's one of the things I like to look at. And so beta, I think is important. 1.61 is the beta of ARK, which is very high. So what I want to know is, what am I getting into? Am I getting into an ETF that's really got a lot of volatility? I need to be prepared for that, and I want to know it beforehand. So that's why I want to know the beta. A 0.18 beta means that it's less volatile, let's say, than the market. Say the S&P 500. Well, 1 would be as volatile as the market, meaning it does exactly what the market's doing. And then you have 1.20 would be kind of high to me. So 1.61 for ARK is a really volatile fund. So this thing is really having a lot more volatility than the overall stock market. So I want to know what I'm getting into. The next thing here is the capture ratio. Where do you find this? You find this on Morningstar, and then you go to the Morningstar risk. So Morningstar risk, and you'll see capture ratios. And you can go by 3-year, 5-year, 10-year if the fund is 10 years old. So for me, this is a 163 upside, so that is a very good upside. And by the way, I think I meant to write 1.63. Sorry, I do this manually. So 1.63, 1.03. So there you go. I should have had that changed, but I write these in manually. So 1.63. I like to see it. For an upside, I would like to see 1.10 would be good, meaning that it has more upside than the general market. When the market goes up, it gets more of the upside. And then what you would like to see is that on the downside, it actually has less of the downside, and this actually does. So it gets a lot of the upside at 1.63, and then on the downside, it gets not as much as of the downside. So that's what you want. And then you see here, you can see the capture ratio, 1.10 on the upside, I think is good or more. And then the downside, this actually has a little bit more downside than I usually would like to see, but not too bad. So that's that part. And then we have the fundamentals, just things like the PE ratio. So what's the PE ratio? This ARK doesn't have a PE ratio because it invests in a lot of companies that don't have earnings. So they don't have PE ratios because they don't earn money. So you have to, of course, be investing in companies that earn money to make sense of this one. I don't have a PE ratio specifically that I care about. It depends on the fund, what I'm investing in, but I just like to know. I like to know what it is just so I know. Same with the price to book. So the price to book is 7.76. Not too bad, actually. It's okay. Distribution yield is 0.2%. So I care about that. And if I'm investing in something because I want yield, let's say, if you're a dividend investor and you like investing in stocks that generate dividends, well, if you invest in ETFs, you want to have ETFs that invest in that generate yield for you, right? So that's an important thing. I don't really always care about it, but I like to know it. And if I do, for some reason, want to see a ETF and invest in one just because of the yield, of course, then this column ends up being very important to me. So the way I use this ETF checklist is I will take all those different things I looked at, for example, for ARK, and then I'll compare it to other ETFs maybe I'm looking at, or if I'm looking at ETFs that are similar, that's really where I think this shines. So this is not showing similar ETFs really, but this is just kind of showing you broadly what you can do with this. So you can take a look at the expense ratios and compare them. You can take a look at the volume and stuff like that. So it just kind of helps you see things, put them into perspective, which maybe ETF is going to be the one you prefer over another one. That's kind of how I use this. I did not fill this whole thing out because, I don't know, I'm lazy. Sorry, I was lazy today. So, but this is how you would do it. And then you come down here, some interesting things like the PE ratio of momentum, MTUM, which is momentum ETF, is 32.55. The PE ratio of ARK is 0 because it invests in companies that don't earn anything. VOO, the basically Vanguard S&P 500 tracking index, is 25.91, so it's got a lower PE. Just interesting stuff. So I just like to look at all these things, compare them, and then think to myself, okay, what do I prefer? Which ETFs do I prefer? Do I prefer having a few of these together? Do I like that? Do I prefer one over the other? So that's kind of how I think. And then the next part is comparing different ETFs that track indexes to each other. So I kind of consider this like a sub ETF checklist. So the first one is like a general ETF checklist for like all ETFs. If I'm going to look at just one specific index, if it's like the S&P 500 index, the total stock market, so the Russell 1000, so a specific index, and I want to see, because all these ETFs are very similar, like VOO is similar to SPY, which is similar to IVV. They're all kind of like the same, right? How do I determine which one is better if all like index tracking ETFs are the same? So what I do is I like to look at, well, first I ask myself, is this an ETF that is going inside a taxable account or not? So if it's not in a taxable account, then taxes to me are very important for ETFs. And in that case, I use this. So I actually use this spreadsheet in my S&P 500 ETF video that I made, but just quickly to show you, I compared IVV, SPY, SPLG, and VOO. So the first thing is, what's the total return? Well, okay, which one has the highest? SPLG did. What's the benchmarks? Is it close to the benchmark? That's important. What's the after-tax pre-liquidation value over 1 year? So like, how does the return look if you don't liquidate this fund, but it's in a taxable account, so taxes end up being a factor. So you want to see that. I get this all from the prospectuses of these different funds. I don't get them from anywhere. I've not found a place to find all this. I actually go into the prospectuses, and I have to hunt for it. So, kind of takes a long time, unfortunately. The after-tax post-liquidation. If you had to if you sold this whole thing at the maximum tax rate, which of these is the most efficient? That's for 1 year. And then you have it on the 5 year, all the same stuff on the 5 year. So that's kind of what I like to do. For this, I ended up saying IBV is the best in terms of taxation. So it's the most tax efficient of these. And if it's inside of a taxable account, then IBV to me was the best one to go with. If it was a non-taxable account, SPLG was actually pretty good. And so was, they're all good, of course, but SPLG ended up being the best one. So that's all I have for this video. I hope this helps you. Take a look at all the things I have here. Make your own spreadsheet if you want to. And you know what? If it helped, please hit the like button. And again, leave a comment. Let me know what you think of the video. Did you like it? Did you hate it? Do you like my spreadsheet? Yeah, just let me know. And you know what? I have another video that's coming up. You should probably check it out. Coming up right now.